Hey guys, so in this video, I'm going to be going over a walkthrough of my entire TradingView setup from start to finish. I'll be going over all the indicators I use, the time frames I use, and why I use it. I'm also going to start off with a brief introduction to what TradingView is and how you can use it into your trading. Skip to the parts that you already know. There's going to be a lot of redundant parts if you watch the last video. This is going to be an updated version, but I will be going through everything from start to finish. So skip to the parts that you think you should have already are aware of, and go right to the parts where you think you need to work on. So let's start off right with TradingView itself. I'm on the products tab looking at the prices. There's three different sort of versions you could use. You can use the Pro Plus, or Premium. Each plan offers different things, obviously for a different price. I have the Pro Plus because it's exactly what I need. Never use more than 10 indicators. I never have more than 4 charts in one layout. So that's perfect for me. If you are somebody who only needs 2 charts in a layout or only 5 indicators, then I'd recommend the Pro version. Likewise, if you want even more than what I have, 25 charts and 8 charts in a layout, then I would say go for the premium version. It depends on what you think is best for you. I would start off with the cheaper version and then upgrade if you need it, because you can always upgrade. It's harder to downgrade. Now, the other thing to go over is going to be data, and this is perhaps even more important. If you trade individual tickers, obviously many of you guys do. So if you trade Tesla, Apple, Amazon, Nvidia, you're going to need the first two. You're going to need NASDAQ and you're going to need NYSE. These will cover the real-time data on those tickers. No matter the premium version, the plan you have, you also need the data. So you also have to pay for it. It's $3 a month for each exchange. You can also get ARCA as well. I have ARCA. The reason why I have ARCA is because it will cover the ETFs, right? So the indices, their indices are like your futures, right? Your ES, your NASDAQ, your S&P futures. The ETFs will follow those futures, and ETFs are SPY, QQQ, IWM, etc. If you trade SPY, QQQ, etc., then you're going to need ARCA as well. Top 3 you need are NASDAQ, NYSE, and ARCA. If you trade futures like NASDAQ and ES, then you're also going to need CME. And that's pretty much all you need to know, right? So go for your data plan, choose the subscription you want, start off with the free version, upgrade if you need, and start with the cheaper version first. Save yourself the money, start with the cheaper version, upgrade if you need it. Now let's go into the actual TradingView setup. We're going to go over everything from start to finish here. So again, skip the parts that you think you already know. What we're going to do is we're going to go to the top left icon over here, the top left area in your screen where you have different time frames. Yours may look different. So press the time interval, the little arrow pointing down, press that, and you're going to star the 2-minute, the 5-minute, the 15-minute, the hourly, the 4-hour, the daily. That's personally what I use, but you should star the time frames that you use on your end on a daily basis. I chart on the daily, the 4-hour, and the hourly. So when I go and I'm drawing my horizontal lines, my key levels, I'm drawing on the hourly, the 4-hour, and the daily. 90% of my levels are drawn in the 4-hour time frame. So I'm going to be jumping on the 4-hour and hourly the most. And then when I'm executing, when I'm actually buying my options or buying my shares, whatever I'm doing, I'm looking at the 5-minute or 2-minute time frame to sort of execute and manage my position. So that's how I use these time frames. Have them starred, have them so they're ready to go. And if you star it, it's going to show right up over here in your toolkit. So you can just jump between them very easily without having to go and click it again individually, right? So that's what I recommend doing. The second thing I recommend doing is also setting up your workspace. So on the top right next to your version here, you're going to set up your grid. So if you like to have 3 screens or 4 screens, however you want your pane to be set up, set that up accordingly. Do it whichever way you think is best. For me, I never like having more than 4 charts in one screen. I think it gets too clunky otherwise. I like, between 1, 2, and 4. If I'm, just trading one ticker in the day, I might just look at one ticker and have my other charts up on a different screen. More often than not, though, 4 charts on one screen. Totally depends what you want to do, though. It's not really important. Next thing you want to do is make sure your autosave is enabled, right? Autosave needs to be enabled. Now that's done, that's the fundamentals. Let's go right into the indicators because this is the fun stuff. So we're going to add about 5 or 6 different indicators, and we're going to keep that as clean as possible. Go to the indicators tab, and we're going to add the fundamental indicator volume. This is probably what 95% of traders have on their charts. Volume represents the number of shares transacted over a period of time. In this case, one candle, right? So in this, one 5-minute candle here, right? In this 5-minute candle here, this was the exact number of shares transacted represented visually, right? In a bar version, in a bar format. So you can tell how many shares were traded compared to previous candles and gauge if that's high or low, right? So that's the first thing. And the second thing we're going to do is we're going to go to the top left and we're going to hit the settings icon, hit the settings right next to volume, and we're going to go to the inputs and we're going to change the input to 50, right? You can choose 50 or 20. It totally depends on what moving average you want to use. I will typically use 50. Then go to the style, and under style, enable the volume MA. And what this will do is it's going to show us a moving average on your volume, right? And what does this mean, right? So if you're using the 50 MA on your volume, right, it's going to aggregate the last 50 volume candles and then divide it by 50, creating a moving average that will fluctuate with time as new candles are formed. So anything above this moving average would be considered high volume, and anything below this moving average would be low volume. So you can see here, if I were to zoom in and represent this area, this little pullback here, this little zone, let me draw a box around it. This little zone over here, right, this pullback area on this chart on the S&P 500, right, this initial move up was on high volume and the pullback was on low volume. This entire pullback, these entire 1, 2, 3, 4, 5, 6, 7 different red candles were on very, very low volume, right? Very, very low volume. Then we retraced, we got to move up, initially low volume, and the volume came back in the market and we saw a big aggressive move to the upside, right? That's how I use volume. I will use volume in two different ways. I'll look at it compared to the moving averages just to compare to see, if it's high or low volume. I will also use my volume to gauge if it's, increasing or decreasing as it's making that move up or down, right? So if I'm taking a breakout, I want to see high volume, right? If I'm taking a balance play, I might be looking at the 2-minute time frame and seeing if the volume is slowing down into my zone, right? That's how I use volume, very simply, very easily. I use it in the 2-minute, I use it in the 5-minute, primarily just to see how the volume is trading at that particular price point. That's key. That's the first indicator that I think everybody should have on their charts. Now, the second indicator I think we should look at is going to be the volume weighted average price. The volume weighted average price is essentially, it shows you the average price of the stock, right? But weighted to its volume, right? So it's basically going to be a mathematical calculation multiplying the typical price by volume divided by cumulative volume. So how I put it is this is basically the average price of the actual stock relative and weighted by volume, right? So this is an incredibly important indicator to have, but not like this, right? What I'm going to do now is I'm going to go back into the settings icon by pressing this little arrow button. I'm going to now press the settings icon here. We're going to remove under style. We're going to remove the upper band, lower band, and band fill. I'm then going to jump to inputs and I'm going to enable the hide VWAP on the 1 day or above. Now I have to go back to the style and remove these again, and then I should be good to go. Now what this is going to show me is basically the average price weighted by volume at any point in the day. So in my viewpoint, how I use this is anything above your VWAP. If the stock is trading anything above VWAP, this is bullish sentiment, right? Anything below VWAP is bearish sentiment. Just a very, very quick and easy way to define the sentiment on the day. There's other strategies using VWAP. You can also look for, VWAP pullbacks, to around 11 o'clock. After 10:30, 11 o'clock, you can look for VWAP pullbacks where the stock retraces to VWAP and you look for a bounce off of it. Likewise, you can look for rejects off of it. And the second way to trade VWAP is to look for reclaims. A big move above VWAP turns into a support and a move higher, right? There's many different ways to trade VWAP. I highly recommend having it on your chart. As a new trader, these two indicators are probably the most important indicators you can have in your chart, volume and VWAP. Many people will just trade with these two indicators, and that's all you really need. You don't have to go fancy and have a million different indicators. You could just have these two, and that covers 90% of what you need. Now, there are several other obvious indicators you can have in your chart. One of them is going to be moving averages, right? There are lots of discussions on what moving averages people use. Some people use the 9, the 21, the 50, the 100. I like to use moving average zones, and I will only really worry about moving averages until I get into a trade, right? So when I'm in the trade, I then turn my moving averages on, and now I'm going to use my moving averages to guide my trade and help me in my setup and stay within the trade, right? So that's how I use it. There are other strategies where you can use, MA pullbacks, EMA pullbacks. For me though, 9 times out of 10, I'm using EMAs/MAs to guide my trade and stick in my position and hold my runners, right? So that's how I use moving averages. what I'm going to do is I'm going to go to the indicators tab, and there are several moving averages you could use. If you are somebody who likes to use linear moving averages, the lines in your chart, I would recommend using the MA ribbon. That's MARIBBON. It's the moving average ribbon. And the reason why I recommend using this one is because if you like to have many different indicators and you want to obviously save your money and not buy a very expensive TradingView plan, you can have 4 or 5 different moving averages within your moving average ribbon. I, however, like to use the clouds, right? So I use moving average clouds. And what that is search HTT clouds. I'm going to enable it. That's the one that I use. And what this is, rather than having a singular line in your chart, a singular moving average, we're going to have a zone, right? So for me, we don't really know what moving average is going to be relevant in the day. So rather than using and sticking to one moving average, I'm going to have a zone. And the zone that's defaulted into my settings is this, right? Let's jump into it and then we'll show you what it actually is. So inputs, yours is going to look exactly like this. And this is the indicator I made. So I'm not changing a thing here. This is literally the settings I have. Nothing else has changed. So I'm keeping it exactly as is. My moving averages are the green cloud is going to be the 5 EMA. Right, let me remove this quickly. It's going to be the 5 EMA on the outer bound, the 8 EMA on the inner bound, and the 13 EMA on the furthest outbound, right? So that is what the green moving average is. And each moving average is essentially the same thing as a linear moving average, but in this case, it's just a zone, right? On this moving average, this orange line, right? This is going to be the 200 EMA and the 180 EMA, right? And visually, this is going to be confusing for a lot of people at first. For me, as a new trader, seeing all these moving averages on your chart, it's a clutter, right? It's just a massive clutter. So it's going to take time to get used to it. But once you do, it's just a very visual thing. And you understand what each of these moving averages are and what zone it represents. This blue line, obviously, this is going to be another moving average zone. In this case, this is the 34 EMA and then the 50 EMA on the outer bound, right? So the 34 EMA in the inner bound and a 50 EMA in the outer bound. Those are the moving averages I use. Everything else is exactly the same here. And the way I use my HTT clouds is I will really only have it up when I'm in a position, right? So let's just say I buy calls on a breakout above this level here. What I may do is decide to maintain my position to the next key level, right? So this might be 400 and change. So maybe my next key level is 400. And what I may decide to do is say, okay, I'm going to get in above this 397.80, right? For whatever reason, I'm getting in a breakout and I'm going to have 2 reasons to exit. Reason 1 is going to be a push into 400. And then reason 2 is going to be a failure of the 8 EMA. So I could use the 8 EMA as my guide, as my friend, all the way up into this 400 level. If it breaks below the 8 EMA, I'm going to take my profit, move out, right? So I use moving averages to help guide my trades. I also use moving averages to execute a trade too, right? If it's after 11 o'clock, if it's after 12 o'clock, I may look for a stock that's very trending and then look for pullbacks to the 34 EMA or 50 EMA, or perhaps even the 200 EMA, right? So that's what I look for with moving averages. I keep it very simple though. These are the exact settings I have on mine. I highly recommend if you want to look for some more EMA strategies, watch my other YouTube video on EMA strategies because I go over clouds in much more detail. Now, the next indicator I'm going to use is, big surprise, another moving average, right? I'm going to add 3 other moving averages. So I'm going to search MA and I'm going to add moving average 1, 2, 3. So I'm clicking it 3 different times. And the reason why I'm doing this is because I'm going to change these settings to be 3 different moving averages, 3 different lengths of moving averages. So what I'm going to do is I'm now going to go to the settings icon and I'm going to change the length of this moving average to 200, right? So it's going to be a larger moving average. And this one I'm going to keep as time frame chart. So it's going to remain exactly as is, time frame chart. But you can also do, if you want to be fancy and artistic, you can go and change the coloring to be whatever color you want. I like to have this as like a red or like a darker color, or a more aggressive color, because it's obviously a larger moving average. And typically, your red or your yellow are like, oh, okay, that's an important level, right? So whatever visually works for you, doesn't matter. I like using a red or a yellow or even an orange, an acidic color for a larger moving average. Not really important though. It doesn't really matter. Press OK, and we're going to leave that just as is. This is a quick and easy way to gauge sentiment on the day. So again, just like VWAP, you can use the 200 MA to gauge sentiment. So if we're above the 200 MA in the 5-minute time frame, bullish, below, bearish. Another just easy way to define sentiment, just like VWAP, right? Obviously not all inclusive, but it does often work. Now, the next indicator obviously is going to be playing with with the two other moving averages. And these two are going to be different. I'm going to now go into this input section again here. I'm going to change this to 200, but this time I'm going to change the time frame to not chart. I'm going to change this to daily, right? So now at all times, that moving average, this daily moving average, is going to be maintained no matter what time frame I'm looking at, is going to be maintained to the daily time frame. So no matter what, this is going to be on the daily time frame. So you can see here that this blue line over here going across my screen is the 200 MA, but instead of me obviously being on the daily time frame, I'm able to see this on the 5-minute time frame. So I know where that 200 MA is, that daily 200 MA is on any time frame I'm looking at. So it's going to remain exactly the same no matter what time frame I'm looking at. The data, the calculations can be exactly the same. The only thing that is changing is the time frame I'm looking at. So in this case, 15-minute, the 5-minute, they're all the same number because it's maintained and anchored to that daily time frame. Likewise, the 9 EMA here, I'm going to add this back, and I'm going to do the same thing, but in this case, I'm going to add the 100, 100, and I'm going to change it to the daily time frame. So this one is also anchored to the daily time frame. Now, these two 100 and 200 MA are used a lot heavily by institutions. They're another sort of gauge of sentiment for institutions, for hedge funds, whatever. A lot of people like using daily moving averages. So I have larger daily moving averages always enabled on my chart. Now, what I typically would do is just keep them hidden. So they're enabled, but they're hidden and they're not clouding up my chart. With every moving average I use, I have them completely disabled. I only have them enabled when I'm looking to execute and get into a trade. So if I'm a SPY execution looking to get into SPY today, I'll throw on my indicators, but more often than not, I'll just have them completely off before I get into the trade, right? So I'll put them on once I execute and actually get into the trade. VWAP I always have on, right? So volume weighted average price will always be on no matter what, right? No matter what. So those are really the big indicators I use. And the other stuff is these are sort of side things, but they're very important. There are two other tools I want to show you. The first tool I'm going to show you is going to be the fixed range volume profile. So I use this only on the hourly and 4-hour time frame. I never use it on anything else. I don't care what anyone tells you. That's what I use, right? Personally, that's just what I use. I only will use this on the hourly and 4-hour time frame. You could also use it on the daily, but for me, 9 times out of 10, it's probably on the hourly or 4-hour time frame. So what I will do is I will look for a clear trend, right? A clear identifiable trend with enough data, right? With enough data. So if I'm on the hourly time frame, I'll go back maybe 3 or 4 weeks. If I'm on the 4-hour time frame, I'll go back to around 100 to 120 days. And then what I'll do is I'll draw a range using the fixed range volume profile. So let me move my face to the right here. And I will click on this little thing. It's 1, 2, 3, 4, 5, 6, 7 down. Click on the arrow and then add the fixed range volume profile. So add the fixed range volume profile. And then what we're going to do is we're going to draw a range from the left to the right. Doesn't matter if it's up or down. Doesn't matter. We're just encapsulating this whole data piece. And what this is going to show me is it's going to show me, instead of seeing volume, which is represented by your x-axis, which shows the number of shares transacted over a period of time, this is now going to show you the number of shares transacted at a price point, right? So you know that these high volume bars are areas where the most amount of shares were transacted. So we know that these are very key areas of interest. So this 400 level, you can see this massive high volume node. This 397 level, a massive high volume node. And what this is going to do is it's going to confluence our basic support and resistance levels. So when we're coming in and we're drawing our horizontal lines, right? So what I do when I'm drawing my horizontal lines is I will press Option H, and I can very quickly draw my horizontal lines. What I will do is I will say, okay, there's a key resistance, there's a key support level here at 400. Well, it's also even more key because not only because it's a psychological level, not only because it's 400 on SPY, but also because it's a very high volume node on your fixed range volume profile. So I will confluence my key areas of support and resistance by these high volume nodes, looking for areas where there's a lot of volume, right? Looking for areas where there's a lot of volume. I also will trade in between these high volume nodes. So I know that if this stock breaks below 400, right, maybe the next high volume node is 398, right? So I can look for that sort of breakdown because in my view, there's not a lot of volume between 400 and 398. Maybe I'll look below 397, right? Below 397, we have nothing, no high volume node until perhaps 388, right? looking for low volume no breakouts or breakdowns, but then also using it, which is more important, using it to confluence your basic support and resistance levels. And this is introducing me to my last topic here with you guys. It's going to be how I draw my basic support and resistance. So when I use TradingView, I will go to the daily, the 4-hour, and the hourly time frame, and I will chart my basic support and resistance using horizontal lines. So for me, I use horizontal lines. You could use whatever you want to do. You can change it to be solid lines. You can dotted or dashed. For me, I just use solid horizontal lines, looking for key areas on the chart, which is drawn purely manually, right? There's automatic support and resistance. If you are a new trader and you're looking for an indicator that's going to help you with basic support and resistances, there's two different indicators you can use. The first one, many of you guys know this, it's called pivot points, so PIVOT, pivot point standard. That's the second one here. Add that to your chart, and this will act as another form of support and resistance. So what you're going to do is you're going to go to your settings icon here. You're going to go to your style, I believe, or visibility, actually inputs. Under inputs, what you're going to do is you're going to look for, oh, there it is, number of pivots back. You're going to change this to not 15. You're going to change it to 1. So you only want to see 1 pivot back. You don't want to see any of the previous data pivots. It's not important. You just want to look at the most recent pivot. So this, for new traders and even for professional traders, for experienced traders, can help you very quickly identify basic support and resistance. A lot of traders use this. I personally like drawing my manual levels myself. I highly recommend trying to get to the point where you can do it yourself. But if you are a new trader, using pivot point standards is a great introduction to basic TA, basic technical analysis. That's the first indicator. The second indicator that I recommend checking out is something called SR space channels, right? This is another quick and easy indicator to use. It helps you identify key areas in the chart as zones, right? So, when we talk about supply and demand, this is another easy way to chart supply and demand using SR channels, right? SR channels will help you draw your basic support and resistance levels, drawn not just as a level or a line in your chart, but as a zone. So highly recommend checking that out as well. Introduces me to my last topic. My last topic is going to be supply and demand. How I chart this is I look for key areas in the chart, obviously, where there's impulsive moves or high volume moves off of it. And what I'm doing is I'm drawing a zone rather than one line, right? So what I do is I go into 1, 2, 3, 4 down, and I'm drawing a rectangle around an area, and I'm using that as an area of interest rather than just one line on my chart. So you can see here, this is one line on my chart. If I want to draw, perhaps an area between two lines, I may just delete the 2 lines and then draw a box around it to encapsulate that entire zone. So the last thing I'm going to show you guys is going to be the appearance icon. So go to the top right, and we're going to hit the little cog icon here, chart settings. Under symbol, we're going to make sure color bars based on previous close is enabled, and then scroll to the bottom here and make sure your pre/post market hours background is slightly different. And how I do that is I make it so it's the same color, but I change the opacity slightly by 3%. And then this one is 3%. The color is orange, and this one, the color is about the same color as what's on the screen here. Just the opacity is different. So I can very visually and easily see that, okay, this orange zone, right? This orange zone is going to be after hours data. And then this light gray zone, right, is going to be pre-market data. And obviously this dark zone is going to be market data, market hours, real market open hours, right? So this is between obviously 4 a.m. and 9:30. And then this is going to be between 4 o'clock and 8 p.m., depending on when the market closes for the ticker you're watching. So that's the first thing that's under appearance. And the second thing we're going to do is make sure your colors, it doesn't really matter, but for me, I have my colors slightly different. So I have mine says gradient, just looks prettier to the eye. Depends what you want to do. It doesn't really matter. Now, the last thing I'm going to do, which is important, is going to be right-clicking your price axis on the right-hand side. So right-click your price axis on the right-hand side. This is the y-axis here. What we're going to do is I'm going to move face to the left, and I'm going to, under labels, I'm going to make sure my symbol name label is enabled. My symbol last price name is labeled, and then also enable no overlapping labels because that's going to make it so there's no clutter. And then lastly, indicators and financial value labeled, have that on as well. And then you are good to go. So this is my entire TradingView setup. I keep it very simple. I keep my charts as clean as possible. When I'm looking at the 5-minute time frame, more often than not, I just have my key levels plotted along with VWAP, and that's it, right? When I'm jumping in a trade or looking to jump in a trade, I then will turn on my HD clouds and then look for possible exit points and use this to guide my positions. I try to keep it as simple But if you want to go more into HT clouds, I recommend looking into my previous video because I go into it in a lot more detail. I hope this helps you all. If you guys have questions on any topic I covered, feel free to ask me in the comment section. I know I went over a lot of stuff in a short amount of time. So take your time to this video, go back to sections you need help with, and then feel free to ask away if you need me. I'm always here, and good luck trading.